Good morning, everybody. It's Thursday, August 22nd, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you've got any questions or comments, please feel free to drop us a line in the chat area, and we'll be sure to get to it during the show. Overnight markets here, December corn down $0.0125 at $3.97. November soybeans were down 8.5 at $9.73, and December Chicago wheat was down $0.0125 at $5.42 3/4. This morning, we had weekly export sales were released. Real solid for corn, 119,100 for old crop, 1,291,200 for new crop. Soybeans, actually net cancellations of 43,700 for 23, but 1.6, almost 1.7 million for 24. Wheat was at upper end of the range at 492,700. And meal was kind of lower end of the range. Net cancellation 20,100 for 23 and 136,400 for 24. Also announced this morning, we had a number of sales announcements that were made. 198,000 metric tons of beans to China for 24, 110,490 metric tons of corn to Mexico for 24, 105,000 meal to Vietnam for 24, and 132,000 metric tons of corn to unknown destinations for 24. Yesterday last evening, we had Pro Farmer Crop Tour came out with Illinois and Iowa estimates. Illinois was actually a record for the tour, 204.14. Beans were also solid, 1,419 pods. That's versus 1,270 last year. Iowa was interesting, kind of like we've been talking about. They've broken it out into districts, and so to give you an idea, District 1, which is kind of the northwest portion of Iowa, came back at 176.59. That's versus 182.5 last year. Bean pods were down a little bit, 1,108 for this year versus 1137 for the previous year. Moving on to District 4, which would give you an idea of west central Iowa, came back 195.8. That's off of versus 168.7 last year. And bean pods were solid at 1254 versus 1120 for 23. And rounding up the districts there that they reported, District 7 is southwest corner of Iowa, came back at 191.5 versus 184.8 last year. And bean pods were sharply higher at 1366 versus 1170. Okay, we'll catch our breath here for a second. Justin, maybe a few initial thoughts as we've got Illinois and Iowa. Nothing real surprising, kind of just a reaffirmation of kind of what we've been talking about, but maybe a few thoughts on the markets and all things grains here this morning.
Yeah, I think, as expected, so the Illinois number is 9% higher than a year ago. Again, like what number they actually come up with and, what the actual number ends up being, I think it's more important the trend. They're using average kernel size, so they're going to overestimate it when you have poor kernel fill and underestimate it when you have good kernel fill. So this year we've got great weather in Illinois. It's been nice and cool nights, good moisture. So I think that jives with what we've already been talking about and hearing. So no surprises there. Same with Iowa, right? The areas that we'd heard from clients that were struggling, that were 10 to even 20% below normal, I think they kind of caught onto that. And then the other areas where we've heard it's been good, they came up with higher numbers. So, yeah, I think the bean pod counts were kind of interesting in Illinois. I think it was the highest pod count since 2000.
That's right.
That they came across in Illinois. So, yeah, I didn't see any surprises there, and on the other side of things, we're breaking into demand, which is good to see. It's the first really solid numbers I think we've seen in quite some time, to be honest, and we're overdue. So we saw little daily announcements here and there, but to see a good solid weekly sales number that was at the high end of estimates and also see another round of daily announcements is pretty positive. So we'll see if that can continue.
Sure. Dustin, maybe give us a few thoughts there, what you're looking at here this morning.
Yeah, so it's interesting. Agree with everything Justin just said. We've kind of broken into the demand And we've known that the crops are pretty good, right, in Iowa, Illinois. So I think we're seeing the confirmation of that. The bean numbers seem really high, the pod counts. So that might be where some of the surprises are if that comes in much higher than expected. We do have, still get through the next couple of weeks, and beans still have a ways to go before they're made. So I think one thing I find interesting is like, nearby spreads are quite wide. Like September corn's widening to December corn. We're getting towards a pretty good carry rate. I think we got to 23 cents, and full carry is closer to 31 cents. We've got that first notice day next week. I think that's also negatively impacting Dec to March. But you look out to all the way out to Dec 25, and some of these spreads all the way out to the back end, things have narrowed up quite a bit, which to us is really curious, right? Like the cost of production is still quite high for Dec 25 corn. The thought would be there would be another round of cost cutting potentially, where corn is not as desirable as beans and wheat potentially. So if we're considering that, and we're also thinking, we're hearing all these awesome, crazy numbers on the crop tour along the river system. It's like, why wouldn't we have some logistical issues to push spreads wider? And I think that's where some of our focus would be is, at some point, we still need to protect carries and protect the value of our storage. But, I could see it at least getting to where it was last year if we're that much higher in Iowa, Illinois, year over year. And there's a logistical problem. So that's where my focus is kind of watching spreads, and this latest uptick on spreads the last couple of days is just curious to me to see what that means. Maybe it's all this business that we're getting. So
Anything to add there, Justin?
No, I think no, I agree.
Nailed it.
Yeah, no, I agree.
As we transition, anything else grain related, guys? I just one thing to note that that strike did go into effect, Canadian rail strike, midnight last night. So I guess this morning. So it would be interesting to see, watching just for news out of that deal and what the repercussions. I know we've talked about it a couple of times here, but just interesting to see what shakes out there.
Yeah, the only thing I would add on grains is, obviously we've talked about first notice day for a long time. A lot of people have talked about it. If we don't kind of break, into first notice day, that'll be interesting. I think to Dustin's point with spreads, if it's been, farmers try to get ahead or elevators try to get ahead of, everybody else selling it, and we've already, factored all that in, I think that'll be interesting to see. If we do just end up falling apart, which has happened many times, where you think okay, everyone already knows this is going to happen, and then it still happens. We've seen that several times too. So first notice day is talked about a lot by us because it is kind of a telling, how we act, going into first notice day and then directly afterwards. And a lot of times if you have a, big break in a first notice day, you have a rally and that fails, then that's a pretty bearish signal. So we really, I think those are just kind of key things to look at. It's kind of a good indicator, in my opinion, on, kind of how the market's situated and who needs to get out versus how many have already gotten out. So.
Very good. We'll keep an eye on that. Ryland, welcome back. Lots going on. Nothing real positive. I mean, we continue to struggle in the meats. Got cattle on feed Friday, but outside of that, I guess maybe just give us some of the thoughts as you get caught up here this morning.
Yeah, just coming back and looking at the bloodbath in front of us, it wasn't too exciting to start to recap a lot of the data, but it just seems like, what we saw kind of last week after there was a lot of headlines about, price controls, price gouging on the retail meat side. I mean, that may have been a little bit of a catalyst for everybody to kind of take a glance and just see where we are. I mean, it doesn't really feel like there's been too much of an effect overall on the wholesale beef sector. Beef prices were up 13 cents yesterday on the choice side, 315.21. Select was up. So you haven't seen that really big down. Really, where most of the damage is happening is in the futures. Cash is still coming down, but very slowly. So we got this massive discount, out forward. Whereas, a couple months ago, we were looking at really nice premiums in the back end of the market. So it does kind of feel like there may be a little bit of a fundamental shift going on, or at least a view that prices are coming down, at a much faster pace out forward than not. So, I mean, cash is trading right around 183 yesterday. That was about $2 lower in the south here. And then in the north, it was about 3 to 4 lower. So we're seeing that spread between the south and the north start to narrow a little bit. So the question is, are the futures going to be right when all's said and done, now that we've got this discount on the board? Because it just feels like cash is slowly kind of following along suit. But October, I mean, this has been a $14 break in October. We're traded the lowest level since like April 16th. So typically we run into some support here, but we're coming up on those lows pretty quickly. So we'll see if the report changes anything here Friday afternoon going into Monday's trade. So we're looking for on feed August 1, just steady with last year. Placements up 4%, and then marketings in July up 8%. So there's some bigger numbers than I think most would like to see, just kind of on the initial impressions. And I think usually before these reports, we see a little bit of liquidation. And I think we have seen a little bit, but not a lot. Open interest really was actually just up 239 contracts. So we may be seeing a little bit more panic selling, I think, as the board just kind of stays under pressure. So we'll see. Maybe we can get some support. Maybe the cash trade news gets priced in here. Same with the beef. So kind of expecting things to stabilize towards the end of the week and into the report.
Very good. We'll take a look at cattle on feed tomorrow. I'm sure you'll have a write-up, and then we'll talk a little bit more Monday morning about it there. A couple of things to point out. Tomorrow's Friday. We got Fun Fact Friday, so tune in and never know what you're going to get with Fun Fact Friday. And Jack will be in hosting to take you to the weekend. So everybody have a good time with that. If you like the show as much as we like putting it on, we appreciate everybody tuning in on a daily basis. Throw us a like and subscribe. Certainly helps us and helps you stay up to speed with everything AgYield, get you some premium content there. So once again, appreciate everybody tuning in every day. If you got the time, it doesn't cost you anything. Throw us a like and subscribe. We appreciate that. Every day that the markets are open, we're streaming live on X, Facebook Live, and YouTube Live, 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.